Let's go first to China, which seems to have been causing a lot of the market volatility that we've seen. Earlier this year, Mr. President, you said that you were sanguine about risks from China.
I said I was more sanguine than the markets, so I thought that was kind of a low bar.
Well, let's look at what we've seen over the course of the summer. Are you worried about low Chinese growth exporting deflation to the U.S.?
Yeah, the story that China growth might be slower than the reported numbers has been around for a long time. I'm certainly hearing from CEOs who do business in China that it looks slower than the official numbers. But still, I think that's been priced into markets for a long time. And so it's not that big a surprise, I don't think.
Well, that's priced into markets, but what about inflation here in the U.S.? Are we going to see lower inflation because of prices lowering in China?
That effect is not that big because we just don't have, our economy's big. We got a lot of other things going on other than trade to China. So I think there will be a little effect there, but it's not that big. And let me just say on the Shanghai Composite, the Shanghai Composite in the first part of 2014, first 6 months, just round numbers, trading at about 2,000. By June 2015, it's trading at 5,000. Now it's trading at 3,000. So, the thing went way, way up, probably beyond anything that anybody could rationalize. And now it has crashed down. It's still up a lot, year over year. So I'm not quite sure that we should be, putting quite as much weight on the Shanghai Composite as we have been.
You have made it quite clear you're in favor of raising rates now. Then we have the market volatility, which Fed officials tell us they like to look through. But in 2013, the taper tantrum, the Fed held off on moving because they said financial conditions had tightened. Well, your own St. Louis Fed Financial Stress Index out yesterday hit a 3-year high. Yep. Does that give you pause about a move in the near future?
Yep. Financial stress index is up. Of course, the VIX is up. I'm not denying it's a volatile period. It is a volatile period. But let me say this. U.S. fundamentals look good. Labor markets look good. We got strong reports on the economy. Second quarter GDP revised up to 3.7. I think we've got a good second half of the year coming. So I think the U.S. outlook still looks very good. And the key question for the committee, and no decisions have been made here, but the key question for the committee is how much would you want to change the outlook based on the volatility that we've seen over the last 10 days? And I think the answer to that is going to be not very much, because we've certainly got lower interest rates in the U.S., longer-term interest rates than we would have otherwise had. We've got lower oil prices, so those are usually bullish factors. On the downside, you might have higher credit spreads, higher volatility, maybe a stronger dollar. Those probably, roughly wash out, and so you've really got the same trajectory that the committee's going to be looking at that we were looking at before. So why would we change strategy, which was basically to lift off at some point, based on this volatility?
Would you argue that if you do move in September, it gives confidence to the markets?
Well, I think it'll be a good day when we make this first move. We've been at zero for 6.5 years, and I think it will signal confidence in the U.S. market.